Good morning, Morgan, and good morning, Geeta. Congratulations on the new role. Welcome.
Thank you, Sarah. Thank you.
So we're looking at another 700-point-plus decline on the Dow. The markets have been crazy after yesterday's insane turnaround. A lot of the worry has to do with Fed tightening and this turn that we're seeing in monetary policy. How much of an impact do you think the Fed changing course will have on the global economy?
So this is the year the Fed will start raising interest rates, and as it should, given that the U.S. economy is back to pre-pandemic trends and unemployment rates have gone below 4%, with inflation ending at 7% at the end of last year. I mean, everything points to the fact that interest rates need to go up. It is a healthy economy, so I think that has to be kept in mind, that earnings are good. The recovery is strong, so that should help. But of course, there is a period of turbulence that can come about because, whenever we have these transitions, there's always a lot of uncertainty about how much will it take, how many interest rate hikes will it take to bring inflation down. So we expect there to be elevated uncertainty and turbulence for sure in these next few months, at least.
You said it was a healthy economy. For the U.S. in particular, is it healthy enough to handle 4 interest rate hikes this year without the recovery getting killed?
No, even with 4 interest rate hikes, we're talking about a nominal interest rate of 1%. Given what inflation is, those are still very low negative real interest rates. So if that's what it is, then we are still looking at quite accommodative monetary conditions, even if they're not as super accommodative as they were before the rate hike started. So again, interest rates are going up, but if you look at the quantitative numbers, these are still in the realm of being able to absolutely support and continue to have the recovery and the strength of the economy.
Just one more on the Fed, because it is such a fixation right now for investors, and another really down day, worse since last October. Bigger risk that the Fed is too aggressive when it comes to fighting inflation and hurts growth, or not aggressive enough and inflation gets out of control? Which is the bigger risk?
Well, given the tremendous uncertainty, I think there are risks on both sides. This is an inflation that's not just very traditional macro factors inflation, but this is an inflation that's driven by very pandemic-specific factors like the shift in demand towards goods, the fact that labor supply is not coming back as one would have expected, that you have supply chain disruptions, and we haven't seen the end of any of this. So, I think what's clear is that there's a tremendous amount of uncertainty. And Sarah, I will just make the point that when it comes to markets, I mean, we have been making the point that markets seem overvalued, especially in some areas. So we would expect to see some correction. The only thing we need to ensure is that this is not like a total overshooting and a complete collapse. So that's, of course, we need to work to prevent that from happening. But some correction is certainly expected.
What about the spillover impact, Geeta, on emerging markets? Interestingly, emerging market stocks have outperformed the U.S. so far in 2022, but there's always a concern that when the Fed starts moving, they feel it all around the world. So what do you see as the biggest risk factors there?
There's absolutely a risk to that. I mean, global interest rates go up when the Fed moves. The Fed monetary policy is like one of the major factors in global financial conditions. So it's going to affect countries. But at the same time, several emerging markets have already pretty aggressively raised their own interest rates in 2021. Several of them have large amounts of foreign exchange reserves. And so they are in a somewhat better situation. But the countries that are borrowing very heavily, short-term dollar borrowing, could see big currency depreciations, and that could be more detrimental for their growth. But it's not a one story for all emerging markets.
Shepard Smith here. Thanks for watching CNBC on YouTube.